Okay, people, this week we have like three major things we're going to be doing, right? The usual is the analysis for the week, the forecast, right? Focus is one thing, it is coming, it is going to be the last thing on the table. Before that, we're going to talk about trades I took alongside the Australian Dollar-Swiss Franc saga. But also before that, meaning the first thing we're going to be talking about today is a test. The other week I had a GPV challenge, right? GPV USD challenge where I just took whatever fair value gap I found on the 4 hours. This time we're trading somebody's trading strategy. A guy who goes by the name DAX, the DAX Brand on YouTube. This is his channel right here, the DAX Brand channel. And he teaches something called QMR, QMC, basically. QMR and QMC. And this is his mentorship, online, free, available for anybody to use and learn QMR, QMC in the way he understands it, right? Anybody who's teaching you something is teaching you from the way they understand it, right here. So right here in my broker, we're going to start with the DAX branch, the DAX method. So right here on New Zealand, Australian dollar, I noticed something which is completely in line with the DAX tutorial, right? Completely in line. And what is the DAX tutorial? I'll put this up on full screen. So this is it. This is what DAX trades. Let's start with a bearish bearish trend, right? So we're saying lower lows and lower highs. But now, this is where his trend starts from. Now, we now see market do something like this. Take out previous high. Okay, for me to explain this better, let's zoom into the daily, right? So we have this happening, right? Which is what is happening right here. Between here and here, right? This is what's happened between here and here. You see, first high right here. Let me just relate that. First high right here, low right here, high right here, and so on and so forth, right? And so on and so forth. So we have this. Now in his technique, we don't know what's gonna happen, but when we see market do, we have to see the market do it by itself, right? So we see the market do this, right? Meaning this was the last lower high, right? I want to make this green since it was a high. So if price goes above here, it's a buy. If price goes below the low, it's a sell, right? So price did this. So this is a low, this is a high. I think I should extend this, make this more visually appealing by making it more elongated. Yeah, so this is it. All right, so when price goes above this high, right, a lot of people will say we've experienced a change in a change of character, which is a change of character in the market, a change of break of structure. Actually, this is just a break of structure, not a change of character. This is something called break of structure. Let me put that down here. So BOS, break of structure. So most people will say we already have break of structure, BOS, right? Because price is no longer giving higher lows, higher highs, or lower lows and lower highs anymore. It just took out one higher low, one lower high, sorry. Now, for QMC, right, I'm putting it here. There's a QMC, there's also, I didn't write that. There's QMC, there's QMR. Both of them are both Quasimodo techniques, but one is continuation, the other is reversal. So Quasimodo continuation and Quasimodo reversal. Let's just write it like this, so it's just under 3 words. So Quasimodo continuation and reversal, but this is how it happens. There's the reversal before the continuation. Now the reversal is, what you do is, when you see this happens, right? When you see this happen, most traders are, I didn't use the right text prompt. I'm supposed to use the normal text text box to do that. So normal text box, putting that above this point here, or no, actually no need. I need to just use this instead, right? I could just use this instead. All right. Okay, so if this is rated as a break of structure, so what happens is this, right? What happens is this. Sorry, I'm a perfectionist to one extent. I like to have it perfect. So after this break of structure, what makes a QMR? You know, the QMR comes first before the QMC. What makes a QMR is when you measure from here to here, you're waiting for price to come in within the 50%. No, now for normally it is the 38, it is the 0.382. But DAX specifically prefers that price makes its way to the 50% before reversal, right? So if price makes its way down to the 50%, you can see this is the 50%. It doesn't take out this low. It could go beyond this, but it doesn't take out this low, right? It go all the way down here before it moves upward again, right? If it's moving upward, right? If it moves upward, the target for it is to create another break of structure right here. That is, it is now respecting it. Take note, there are two lows it's respecting. It's not just respecting this major low right here. So this is like the major low. It's not just respecting this major low. So I'll call this M low. So it's not just respecting this major low, right? It's also respecting this low that was made here before, right? So this is Quasimodo reversal. So people usually place their trade when they see this happen after this break of structure. They usually place their trade right here on the fifth, either the 61.8 or 50%, whichever one, and they put their stop loss below this low, and they aim for maybe this high or the next high after that, right? Which is this particular high right here, which is this high right here, right? So they could be aiming for one of this, or based on their calculation, they could have a set risk to reward ratio, which could be 2, 3, 1.5, whatever it could be, name it. This is their own expectation. Now, that is for Quasimodo reversal. Now, we do not know if a break of structure is what called a Quasimodo reversal yet. So most people, they tend to wait for it to happen, right? So this trade is already taken as of this point. So immediately they find this, immediately they see this first move, right? They set up here. Immediately they see this first move. Immediately they find this first move, break of structure, they set up at the 50% already, which is high risk move. Now, in DAX's opinion, he prefers that this already happened. Now, this shows that there is a continuation, right? Continuation is that price does the exact same thing again, but this time it doesn't take out this low. So it moves down and goes up and takes out this high instead. So this is now a continuation. So this is now a QMC. So take note, all of this right here is called the QMR. And then when this is now added to it, it now becomes a QMC. That's the first part of the entire strategy. Now, with this strategy, it means that price does this, and price does this. So for a QMC to be fully confirmed, you would notice that price does this exact same thing. Sorry. It does this exact same thing. Again, it goes down. It doesn't take out this low. And then it goes up again. So this is now, it's a QMC. It's moving in line, right? It's moving in line. It's moving in line. It has reversed. Now it's continuing its reversal. So this is a QMC. Now for DAX, this is what DAX does. Now that says he will take the low candle here, that means the last bearish candle, and he will draw a rectangular box around it, right? This is the last bearish candle with a rectangular box around it. Why am I using purple? Because that is his colors. That is his color. He draws a rectangle around it. Now, he expects that price does whatever it's doing, go whatever distance it wants to go. But when price finds its way back to this level, it is highly expected for price to kick into this level. It can find its way all the way down towards this low. I think I have to do a little bit of yeah, so good. This is perfect. I need to hide all of this so we can see what we're saying. Yeah. So he expected that price is going to come into this low, probably make its way up down here, you know, into this low. It might not touch it, but it might make its way here. But upon meeting here, he has already placed a trade, and his trade would be on this line. He's going to stay right here. Stop loss below this, so it could be here, but he likes to give it breathing space, so he likes to put it somewhere around here. And then he aims for a 3 risk to reward ratio, which is this. Which is this. So he aims for 3 risk to reward ratio. And then he expects price to do whatever it does, but not go beyond this position before it starts to make its way up for his take. That is his expectation. So all of this, putting all this knowledge right now into the chart, right? Putting all of this knowledge into the chart, I use the zigzag indicator, and I just saw this the other day. Now this is the indicator, zigzag indicator, and it's clearly showing. In fact, I do not know why I deleted all of that. Let me just put it all back. Yeah, let me just put it all back. So if I remove all of this, clearly, the zigzag indicator is literally showing the exact pattern right here. You see the up, down, up, take out high, which is this high. So first BOS break of structure. Come down, doesn't take out the low, doesn't take out this low either. And you can see second low taken, second high taken. So now it means whatever I'm doing, I should start aiming for a 3RR, right? 3RR. Remember, your risk is what makes your reward, the 3RR. Don't forget that. That is very important. Your risk is what makes your reward a 3RR. So it means whatever you're risking, it should be reasonably, your stop loss should be in a reasonable direction. So because I'm trading the QMR in this, I'm going to put up the chart now. So it means, according to what DAX teaches, this is supposed to be a trade that we're supposed to take instantly, like instantly. I am going to take this trade. This night, market is going to open around 10, 11, and I'm just going to jump in and place a buy trade instantly on New Zealand dollar against the US dollar. And I'm going to be aiming for a 3RR. So how did I calculate my stop loss, right? How did I calculate my stop loss? This is how I did it. So I measured from here, from the high of this place, that's from the high of this, what is it called? From the high of this POI to the lowest point, you see is 1.38%. If I pull up my calculator, so 1.38, and I want to take about 30% of it. So multiply by 3, so that's 0.41, right? 0.41. And if you measure from the low, right, to where my stop loss is, it's about 0.46. So this is how I measured my own stop loss for this trade. So I'm giving it an extra 40%, 40% buffer from the low of the entire region, right? Now I'm going to place a buy trade. I'm supposed to, I would have placed this trade. I saw this trade yesterday, which is Saturday, and the market is already closed. So I would have placed this trade if I had seen it on Friday, and my aim would be simple, right? aiming for the usual 3RR. I literally named it DAX PY. I might not go all the way to 3, but all I just want is for price to make its way to at least 1.5 or 2, and then I'll be out of the trade. If it can make that, I'll take some percentage and let the rest roll. So this, my friend, is my plan for next week. Move number 1. Now let's move on to move number 2, which is the Australian dollar, the Australian dollar Swiss franc madness. Why do I say the Australian dollar Swiss franc madness? On my strength meter, now normally you all know I use market milk.baby pips, but I'm changing this because over here I have to come look at weekly, though I love it because it shows me like historical timeline. I do love it. I still use it. I have to always switch down to daily and switch down to real time, and in this case being weekend, I have to use last close. You see daily, you see Friday was the last day, was extremely crazy for things like the New Zealand dollar, the Japanese yen, you see the euro, the Swiss franc, the Australian dollar, and the US dollar. You see 1, 2, 3, 4, 5, 6 experienced crazy move. You can see that sudden spike in movements. You can see sudden spikes in movements, sudden changes, especially for the US dollar. There was a sharp change in trend. The Japanese yen sharply continued its trend. The New Zealand dollar also a strong continuation of its trend. The euro, slight change. The Swiss franc, sharp continuation, and the Australian dollar, major sharp continuation. And you can see right here on this chart, the most craziest move was made by the Australian dollar and the Swiss franc. Right here you can see it, the US dollar seems to carry it, but Australian dollar, Swiss franc, and the US dollar. I do not need to be doing this all the time. This is why I switched into something called fxblue.com, market-data/currency-strength. What I do here is, the reason why I like this place is it gives me a clean, instant indication of strength by taking weekly, the daily, the 4 hours trend and dividing and giving me the average of that currency. So you can see these 3 put together, the average of it is 5, and that is extremely bullish. And right here you can tell right off the bat that the Swiss franc was the strongest move in terms of the long term. It's combining 3 time frames. Remember, this is showing you 1 time frame alone individually. This is combining 3 time frames already and giving you an average. So you can do short term. Short term is for people who scalp. You can see the 5 minutes, 15 minutes, and the 1 hour. For the medium term, people who are like intraday, who trade for like a day or two, can trade for a whole day or 2 days. You can see this is the 30 minutes, the 4 hours, and the daily. And then for people like us who are swing traders who like to hold trade all the way to like days, weeks, you can see this gives me the 4 hours and the daily and the weekly, which we all know these are the 3 time frames which I usually bank on what is really happening. Then I use the monthly to determine, okay, what's the real overall direction. Now, this, my dear friends, is me having the easiest means to see what I want to see without looking at the chart. And right here you can see the Swiss franc was heavily bullish, the Australian dollar was heavily bearish, meaning they are like on the 2 opposite spectrum. Now let's see this on the chart. We're going to pull up Canadian dollar as Swiss franc. The Australian dollar and the Swiss franc. Sorry, that is supposed to be AUD Swiss franc. Ooh, I did not, I just closed that mistakenly. All right, let's see if we'll find it on here. AUD. Can I open it? Oh, I already have enough tabs, so let's just close one and add it up. Okay, so you can see right here, this was a show of, should I call it bastardization or total removal? I mean, look at, this was Wednesday, Thursday, Friday. You can see what happened on Friday, and To prove that this is a daily problem, right? Over here, you look at the daily move on this point and the daily move on this point, you can see bad as, good as. Clearly, even the New Zealand dollar is seriously beaten. Like, it took serious battering. Right there. I mean, look at both of them. Heavily destroyed, my dear friends. Heavily destroyed. It was like, I don't even know how to explain it. But if we take a look at the news, right? The news for Australian dollar, Swiss franc, and New Zealand dollar, what we would notice is the Australian dollar had like infos prior to this, right? The Australian dollar had some low news. See, this is what retail sales was bad news. The PMI for Swiss franc was bad news. So how come the Swiss franc gained so much ability? So this is where it happens, right? On Thursday, this happened. The New Zealand dollar is still on the average level, but the Australian dollar released a very terrible trade balance, like extremely terrible. It is bad, real bad. And then the Swiss franc released a just slightly bad CPI news, meaning at this point in time, it is more trustworthy to be buying Swiss franc than to be investing in Australian dollar or the New Zealand dollar. Even though the Australian dollar brought out an unemployment rate which was slightly higher than its forecast, but it still made more sense to stay here than the Australian dollar or the New Zealand after their news. I had a trade Canadian dollar Swiss franc, right? I had a trade Canadian dollar Swiss franc, and this is one of the most painful trades I have made in a long time. I placed this trade. You can see twice I tried to sell this trade. The first time I left the market with just 11 cents. I closed the trade with just 11 cents. The second time I closed it in losses of $45. And this is the trade right here. So I entered this trade some days prior, and then on second was when I closed this on this trade. On second, let's see, was it on second? Yeah, on second I closed this trade. Second, early morning on second. And why did I even close this trade? I want to show you why. So on second, when I woke up, I saw that this area seems like it is suddenly getting heavily respected, which truly, let me say, it's not supposed to be in my context of view, but was really getting respected. And then guess what? I then saw this happen. Like, this was a clear show of strength that the Canadian dollar was stronger than the Swiss franc, right? Was way more stronger. And what do you do in this case? You cut your losses, right? You cut your losses, and I decided, okay, I woke up the next morning, I saw all of this, and I was like, I don't think it's gonna be a good move for me to stay in this trade. And then I walked out of it, right? I walked out of it right around here. I need a vertical line. I walked out right around here. So this is where I walked out of the trade, and I didn't come back to look at it anymore. I wasn't chanced throughout on Friday to check the chart. If not, I would have jumped in again right around here after seeing such bearish move. I'd have jumped in, but it turns out that this trade would have yielded the expectation, which was a 1.19 risk to reward ratio. And guess what? It even went further to give me a usual target of the 2 risk to reward ratio, and even slightly more than that. But all that trade is in the past. That has happened. This just goes to remind us, when you make a trade, when you place a trade and you have a very calculated stop loss and take profit, stick to it. You can see this other trade hit stop loss. I'm not even pained by this one anymore. Like, I was not even pained by it when it hit stop loss. I cannot even remember what it looks like, but I'm not pained by it. But you see, this one, I was really pained by it. Now, all of that by the wayside, let's head into the real reason we're all here, the analysis.